Hi everyone, Richard Robbins here. Well, the numbers are in for the Calgary Real Estate Board, and what I want to do is I want to share with you what went on in February of 18 opposed to February of 17. Then I want to do another comparison, January of 18 to February of 18, and then I want to show you what's going on in terms of months of inventory in your different sectors like condos, semis, detached, that sort of thing. And then just give you a couple ideas and what might be in store for the rest of 2018. So first of all, let's take a look at the numbers for February of this year to February of last year. If we look at the numbers, the amount of sales was 1,094 sales in February of 2018, opposed to 1,334 February of last year. So you can see our sales were off by 18%, fairly substantial number. Active listings, 5,202 at the end of February of this year and 4,502 at the end of February of last year. So our listings are up by 15.5%, which means our months of inventory obviously must be up, right? Because we did less sales, more listings. Months of inventory, February of 18, 4.7 opposed to 3.4. So we're up by 38%. Pretty substantial number. However, good news, if we look at the average sale price this year, 493, and it was 481, which means February over February, we're up by 2.5%. And days on market, just up slightly by 3 days, okay? So nothing too extraordinary to look at there in terms of days of market. But what you're seeing is that the year has started off much slower this year. Now, maybe it's because of the stress testing, right? You know, maybe because interest rates went up a little bit last year, who knows? Maybe because of weather, because when the weather's cold and snowy, you know, people tend not to think about selling, and a lot of them aren't thinking about buying as well. So I don't like to make any prediction until we see the end of the first quarter. But what happened January opposed to February? First of all, February of 18, we did 1,094 sales opposed to 958, so up by 14%. It should be up, right? Because, you know, January is usually a slower month than February every year. Active listings, 5,202 at the end of February, 4,623. So you can see your listings are starting to rise. People are starting to put their homes in the market. In February, we had 4.7 months of inventory. January, only 4.8. So you can see it starting to go down. Of course, you can see their prices were up pretty substantially, 493,000, and days in the market are down slightly. So when I look at all of these numbers, you say, well, yes, we've had a slow start. You can see a correction is starting a little bit. February is starting to pick up. And again, I think because of the weather, it might have been a little slower in February than, say, what it would normally be, you know, like what we had last year. But here's a cool number I want you to look at here. So what this is months of inventory. Now, what's a balanced market? A balanced market is about 5 months of inventory, okay? So, you know, if you've got 20% of your listings selling in any month, that really is a balanced market. Once you get above 5 months of inventory, your prices are going to weaken. Below 5 months of inventory, obviously, your prices are going to go up. So what you also want to do when you're talking to buyers, when you're talking to sellers, you want to figure out the months of inventory possibly in a geographical area, or you want to break it down by property type. So if you look at these numbers, detached has 3.7 months of inventory. So what's happening with detached prices? They're going up. Condo apartments, right? They got 7.2. What's happening with condo apartments? The prices there are probably very, very weak, depending on the building. There's some buildings that would be doing better than others. Your semi-detached, you got 5 months of inventory, very, very balanced. And row house, 5.9. So, you know, more of a buyer's market, but just sort of starting to become a buyer's market. So what my recommendation is this. Watch the numbers as we move into March. I do think you're going to see the market start to pick up a little bit in March. But I do think this year will probably be a little bit slower than last. And that's because of the stress testing. It's because we've had rates bump up a little bit. And there's also a chance we might have rates bump up once or twice, possibly this year as well. So just keep in mind, first of all, keep a great mindset, okay? No matter what is going on in the market, you can't change the market. You can only change what you're doing in the market. Always be looking for great opportunities out there. And remember, when a market is changing, quite possibly what you were doing last year might not be as effective this year. So you got to consider changing your strategies, changing your ideas, and maybe doubling up on your prospecting efforts. I hope this was helpful. And remember, everybody, it's a beautiful life. Make it count.